Hi, this is Michael Cohen. I'm a Dallas elder law and estate planning attorney, and I'm joined by my good friend and cohort, Don Crawford Jr. Thank you, Don, for sharing again, as always, your time to see what your input is, just like we did on our radio shows last year.
Glad to
So
be here. Thank you.
thank you. Well, today I think the topic is going to be on Trump accounts. As many people know, on July 4th of 2026, they allowed the Trump accounts to be finally funded. It's for those who were born on or after January 1st, 2025 through January 1st, 2029 or December 31st, 2028. If you're born in that time, the government will give you $1,000 to set up a Trump account. A Trump account is going to be an account that's invested, uh, you know, maybe some sort of index fund or S&P 500 fund, and a people can give a total of up to $5,000 in the account each year, and it will grow without taxation until the kid reaches majority. So that doesn't mean $5,000 a person. It's 5,000 total for the year. So the money could keep on growing every year, $5,000. So at the time that the child reaches age of majority, it doesn't matter how they spend the money. It could be on a business, it could be on education, it could be on anything they would want. But when they do sell, there would be capital gains tax. So I thought I would write, or I wrote an article about how this would affect on gift taxes and also on those who are on SSI, supplemental security income. How would Trump accounts affect gift taxes and how would it affect Medicaid? All right. So I just mentioned you could give $5,000 in a year. So will that go towards what is that in addition to the annual exclusion? What is the annual exclusion? So each year, you can make a gift of up to a certain amount. Now in 2026, it's $19,000 a year per person without reporting to the IRS. I anticipate it'll go up to 20,000 next year.
Sure.
So if you had five different beneficiaries, you could give 19,000 to each of those, $95,000, or yeah, $95,000, and um, and it wouldn't even have to be reported. If you gave more than that, let's say you gave more than that, you gave 119,000 to one individual. Well, there's the estate tax limit is now $15 million under the one big beautiful bill. Trump accounts were also part of the one big beautiful bill signed last year. Well, anyway, if you gave 119,000, in effect, you're saying I can't give 15 million when I die. I can only give 14,900,000 because I gave away 100 during my lifetime. Now, I'm sure a lot of people have that problem, but but it is not unusual for people to give the annual exclusion, even if they didn't have a taxable estate. So the difference is if you give more than 19, you're supposed to report to the IRS. So now the question became, what about these Trump accounts? Does that count towards the 19,000? And the answer is you do not have to report as long as when you gave to any individual that you cannot have given more than the annual exclusion. So if I gave 5,000, let's say I had three grandchildren and I gave 14,000 to one, 14,000 to another, and 15,000 to the third. Well, then that would be treated as a future interest and not as a gift. And so therefore it would have to be reported. But if I had given 14,000 or less to each of those beneficiaries, then that would have been a gift and used up the remainder of the annual exclusion. It has to be an individual, and it can't be more than the annual exclusion to one individual. So That was the problem with that example. Um, so that's how it's treated from a gift tax. Normally, the if like I said, if I had given away 119,000 for getting Trump accounts for a second to one individual, then the one who makes the gift, not the one who receives the gift, is supposed to file a gift tax return.
You've always said that and taught that, and I've always found that strange, but you emphasized that just now, and I understand that that's the case.
Yeah, I mean, most people think it's the one who receives it because it would be like it's almost like income, but
Well,
that's not the way it is. So the rationale at the time, just to let you know, it was 100 some odd years ago, the really wealthy families would try to reduce the estate tax by giving to lower generations. So as a result, they decided to come up with a gift tax. And there's also a thing called a generation skip transfer tax. So again, they're trying to reduce the planning for giving to lower generations.
okay. Good to hear. I'm excited.
Pardon me. The next thing is on probably will hardly ever happen, but I thought that I would mention about SSI and Medicaid. And what is SSI? Supplemental Security Income. So if you had a minor on SSI, then would a Trump account count? Can only have less than 2,000 if you're single. Well, it would not count, but it'll rarely happen because usually if you're a minor, the parent's income is deemed to you. The parents, because of the deeming excuse me, and their resources are deemed to you. So if their resources are deemed to you, it's more likely they'll have too much assets. But for some, it would be the case. And so then once they treat, can you put the SSI towards the 5,000? The answer is no, because it's supposed to be for support, um, like housing. Um, what happens when they reach age of majority? Well, first of all, usually with a Trump account, when you sold something, you have capital gains tax. Here on Medicaid, well, we'll see if there's options to change to what's called an ABLE account, which is an account that will not count, or some IRA that wouldn't count. We'll see.
It'll be very interesting for sure. And like you said, we will see. Um, but it's complicated. You know it, I know it. And to get these answers that people may have prior to this video or as a result of it, they just need to attend your next workshop, whenever that is, this month, next month, whenever they can make it. They just need to call your office to find out about the workshop, which is in person. It's free. It's about 2 hours, and they learn a lot, is my understanding.
That's right. If you are interested in going, call 214-720-0102, 214-720-0102, or sign up online at dallaselderlawyer.com,
Thank you.
dallaselderlawyer.com. Thank you, Don.